Alright, what's happening, Bitcoin Chaser fans? You're here with myself, BroKaine, and Bitcoin Chaser for our crypto news live at 5, which happens every single Wednesday. What we're going to be talking about today is actually very interesting. We've got some information on Intercontinental Exchange launches the Bakkt network for digital assets. We're going to be taking a look at the Bitcoin Chaser blog. And we're going to be taking a look at Bitcoin and the stablecoin fallacy. Now, the interesting thing is, can blockchain be the bridge between reality and video games? And to help us explain this and at least give us some insight into one of his current projects, which is Virtual Universe, I'm going to bring on Jacob from Token Agency. He's going to help us understand what Virtual Universe is and, more importantly, how they're affecting the current market for gaming and how cryptocurrency relates to that, and blockchain, and how using virtual reality can all work hand in hand to make this kind of achievable. Right now we're on, as we all know, the link to everything we discuss is in the description below. And we are on the Can Blockchain Be the Bridge Between Reality and Video Games, taking a different kind of start to this live stream, going straight into one of our articles, and I'm going to bring on Jacob now. How's it going, Jacob?
Sure. It's going well. Thank you very much. Yeah, I think it's a super interesting topic. And you can start with kind of the foundational pieces of what's interesting about bringing blockchain to gaming and being able to, hold and track and trade unique digital items in game, as well as cryptocurrencies in game. So everything from like virtual real estate to in-game items and experiences are all things that can be, that blockchain and crypto can help facilitate those economies, and reduce concerns around fraud, and just help to strengthen and bring trust to those economies. But the thing that obviously it comes down to with gaming is that you need to actually have a game. It needs to be a place where people want to hang out. Now, like chat environments and Second Life and creating experience is definitely a part of that. But really what drives the biggest adoption is to have a really good game. And I think that's what makes Virtual Universe unique, is that in addition to all of the economy elements that you would think of in terms of real estate, events and experiences, businesses, and then even having people go and explore the outer reaches of the virtual universe to find rare and necessary ingredients and resources to bring back to city centers and build in-game items. Like that alone is just an incredible concept to me, that can actually be somebody's future career, is being in a game and exploring outer reaches of a virtual universe to collect resources and then sell them. But the big thing is that in 2019, they'll begin the story arc of the actual game. And I think that's going to be the real differentiating factor beyond the graphics, beyond the immersive experience, beyond the AI and machine learning of all the animals and beings in this world, is going to be this game-driven environment. Because ultimately, as gamers, that's what keeps us involved and engaged. So having a persistent story arc that is driven by the game creators, but also influenced by the players, that's where you really enter the world of like Ready Player One. And I think that's what's so exciting about it.
Wow, I mean, that's really insane, actually. And will they use, what can we see between the migration between an actual exchange, something like perhaps Hit BTC, and a game that is on the blockchain? Could there be a correlation between the two, where we eventually see a real in-game item being able to be traded for BTC or Ethereum or any of the alternative currencies and actually transferred into a user's account as fiat? Could that be a possibility in the future?
Yeah, I don't see why not. And there are already conversations between Virtual Universe and like WAX, the Worldwide Access Exchange, which is probably the leader in that space of trading actual items. So that's certainly a possibility, but also just an in-game exchange. There'll be portals throughout the virtual universe, which essentially function as in-game exchanges for items and crypto. So BTC, Ethereum, EOS, the rest of that, their in-game currency called View token. So I think you'll be able to see both of those facilitated. Obviously, that's where you'd want to have it first and foremost, is in the game itself, to be able to do those exchanges. But certainly to be able to have partnerships and access and make extend those economies out to external exchanges as well.
Wow, that's incredible. And what kind of equipment is needed to play Virtual Universe, to actually get on board and interact within this game?
Right now, it's the same technical requirements as you have to access other virtual reality experiences. In this case, they're set up for HTC Vive or Oculus Rift headsets. You need the computing power to go along with that. They have an open beta. We've had a number of sort of influencers and gamers come through and do in-game tours with what they have so far, which is already pretty mind-blowing. But yeah, there's an application to join their beta program, and then expect early next year to have more of a public launch, and also to see their VU token.io. The parent company is called Immersive Entertainment. That is immersivent.com. If you just want to see, learn more about their killer development team, these are people that have worked on Halo and Assassin's Creed and other really popular games. And their first virtual reality experience was this Grand Canyon experience. So you can see some of their past background and get an idea for how creative and immersive this environment already is. But then viewtoken.io to see where the virtual universe is headed, and get an idea for the first planet and the first city in this virtual universe, and some of the things that you can expect, when the story arc begins early next year.
Wow. I just want to thank you so much, Jacob, for coming onto the stream and giving us some insight here. I'm sure a lot of people are going to be interested to find out what Virtual Universe is and actually possibly get involved. And it'll be interesting to hear back from you maybe in a month from now or something, and you let us know how the progress and the development on that is going, and what big milestones you've achieved by then.
Yeah, thanks for the invite. It is a bizarre and fascinating and interesting world that we're entering into.
Absolutely.
So we'll see how quickly it progresses.
All right, man. Have a fantastic day, and I hope to see you again on the stream soon.
All right, talk to you then.
Cheers, Jacob. Bye-bye. Right, so that was Jacob Grimscon on Virtual Universe, another decentralized application for gaming. Let me know your thoughts in the comments section on the right if you're watching from an offline browser or an offline stream where the stream is not currently live. Be sure to check in the link in the description for more information and visit the site. Can blockchain be the bridge between reality and virtual reality and video games? Video games are usually seen as an escape from reality. Science fiction has portrayed a world where reality and video games begin to overlap in many instances. Take Spielberg's Ready Player One from 2018, Cronenberg's Existence in 1999, or Spike Jonze's Her from 2013, for example. The blockchain may bring these fantasies where virtual and physical realities meet closer to the fact. The blockchain connection. Take any game where players create or win assets, for example. For a long time, it was almost impossible for a game asset to have transferable value in the open market. For instance, weapons or skins won in a game would stay in that particular game and never acquire real economic value anywhere outside of it. All of that is set to change with blockchain games. Imagine a future where assets won in one game can be traded for assets in a different game, and all of these possibilities with games that run on cryptocurrency. My theory on that is it's further than that. You can exchange one item in a game for another item in a different game, but maybe you actually can retrieve a fiat value from that, and that's what I'm really excited about. We spoke about it in last week's video as well, talking about how we can possibly maximize the blockchain connection to something like World of Warcraft. If you haven't seen that, be sure to check out last week's video. Going deeper into the rabbit hole, the cryptocurrency XP, experience points, promises to give you tokens for activities you enjoy in real life. Examples are going to the movies or a restaurant, or going to school, or possibly finishing a marathon on time. The team behind XP is also going as far as to incentivizing action within a community through remuneration with XP tokens. If this far-fetched project ever takes hold, you could use your experience points that you earned in real life to buy in-game assets. Linking real-world experiences to success within a game could make video games less addictive. The price of XP rose from 0.00000044 in 2016 to a measly 0.006 in January 2018, a 13,706,718% increase. This shows that there might be a demand for this kind of product. More games that use blockchain to bridge between virtual and real. Apart from XP, there are scores of other projects that use blockchain technology to blend the virtual with the real. Decentraland is another example. This game is a virtual reality world that runs on the Ethereum blockchain, where players can buy parcels of virtual land and develop it into anything they want. It could be an underwater resort, a city, or an extra-planetary casino. Users can then monetize their parcel of land and visit other users' parcels. How flippin' cool is that? All available here. Go to the link in the description. I definitely suggest that you read up fully on this article. Taking a look at the up-to-date cryptocurrency news and information for the week, we have Coinmarketcap at Bitcoin at $6,576, a pretty stable price over the last week. However, it is down 0.6% over the last 24 hours. Ethereum at $225, down 0.71% in the last 24 hours, kind of on an uptrend in the last 7 days, but nothing too drastic. XRP down from last week, serious downtrend at the moment here, $0.46, down 2.58% in the last 24 hours, big downtrend. Bitcoin Cash, pretty stable. It's seeing its volatile price changes, yes, but realistically on a stable $508, down 1.22% in the last 24 hours, but also up quite a margin in the last 2 days, but overall stable across the last 7 days. Stellar and EOS, pretty much differentiating markets here actually. EOS at $5.87, up or down, should I say, at 0.27%, but a general uptrend over the last 7 days. And Stellar seeing a more stable price at $0.2, down 1% in the last 24 hours, and a pretty stable price over the last 7 days. Litecoin and Tether kind of staying a stable price at the moment, $57 for a Litecoin. I remember back in the day when Litecoin was almost $380. That was incredible. But basically it is down 1% over the last 24 hours, relatively stable over the last 7 days, volatile nonetheless. Tether at 99 cents. Really, Tether doesn't move. We don't even have to go into that. Cardano at $0.08, seeing a negative 2% over the last 24 hours, staying stable over the last 7 days. And finally, Monero at $112, down 0.54% in the last 24 hours. And relatively stable up until about 2 days ago, and it has started going down again. Rightio, so that is your Coinmarketcap update. Now we're going to be taking a look at a new piece of information here. Intercontinental Exchange launches the Bakkt network for digital assets. What on earth could that mean? In early August 2018, the Intercontinental Exchange, ICE, the parent company that operates the New York Stock Exchange, launched Bakkt, a crypto payment system for retailers. The first futures contract will be Bitcoin to fiat pairs with major currencies including USD, GBP, and Euro. A strange message though. It's a strange message to deliver to the public, since it doesn't consider the size of the contract and the fact that giving a person a contract and then a coin probably defeats the purpose of the contract. Users will have to wait and see how ICE will roll out these contracts. Let's talk a bit about credibility. If ICE manages to roll this service out correctly, it could quickly corner a segment of the market that is expected to grow quickly. Trading platforms are trying their best to secure assets using blockchain technology, while at the same time offering blockchain-based assets to mainstream customers. Part of the reason why people are reluctant to invest in such assets and invest in platforms that work with blockchain technology is due to multiple headlines about hacks and exchange data breaches. To deal with this credibility issue, Bakkt is banking on the reputation and experience that ICE has built over the years. Are you familiar with the New York Stock Exchange? And are you familiar with the Intercontinental Exchange? Let me know in the comments to the right of this video. If you're watching offline, do let me know in the comments below what you think could be in the pipeline for ICE Bakkt. Next, we're taking a look at a Bitcoin and the stable coin fallacy. Now, this is something that's very, very often talked about, and I don't think we get into enough detail about this. And here we are with some incredibly interesting facts. Let's take a look at this. Commerce benefits from economic stability. If consumers have a degree of certainty about what will happen tomorrow, in a few months' time, or even a couple of years down the road, their consumption will enter a stable, discernible pattern, at theory at least. As long as people agree that it exists, consumption will normalize. Exchange rates and inflations are key factors in this normalization. Predictable inflation rates that are low enough, along with stable exchange rates, bode well for consumption. A stable coin named Bitcoin. That is before its price started moving within the 6,100 USD to 7,000 USD range. At this point in time, it seems that Bitcoin's daily fluctuations would encourage more consumption and therefore call the need for a stable coin such as Tether into question. The data about Bitcoin usage as a currency is scant, so it is difficult to see if consumption increased due to its recent price stability. Nevertheless, the whole stablecoin argument for consumption purposes seems to be moot in most cases. According to the site wheretospendcryptos.com, only 1% of merchants accept payments dominated in Tether, or at least one merchant accepts payment in Tether. So it is important to understand that this might be due to Tether's reputation or lack thereof, but still it shows that merchants don't seem to be interested in stable coins. They would rather accept Bitcoin than Tether, and with recent price stability they face less risk when doing so. Consumers, however, are less likely to spend their Bitcoin even when prices are more stable, if they are fully aware of the deflationary nature of the coin. Therefore, inflationary fiat currency will continue to play a central role in commerce as long as the financial system doesn't collapse. It makes more sense for Bitcoin holders to spend their inflationary money first, and it makes no sense whatsoever for merchants to adopt a virtual currency like Tether that is backed by the US dollar when they can just accept fiat payments directly, which is a very true point. You know, why go through the difficulty of accepting Tether when a credit card payment achieves almost the exact same result? I guess for that exact reason, credit card payments do have higher transactional fees. No stable coin for old Bitcoiners. This doesn't mean that Bitcoin economic activity is non-existent. There are a wide variety of services and goods that people buy and sell using Bitcoin every day. Bitcoin consumption will not grow as fast as expected because it's a deflationary asset. Volatility has little to do with it. On the other hand, the quest for a stable coin is chimera. To create a stable coin, inflationary currency backing is necessary. Tether claims to be a USD reserve. Fiat-backed stablecoins are stable just if people use them as such, otherwise market trading can bring unexpected volatility at any point. Stablecoins are also stable if they do not face competition. Once there are a few stablecoins out there competing for demand, volatility will increase and so will the risk of holding them, which seems to say what will happen now that Gemini has been released by the Winklevoss twins. If you haven't seen that particular information, do check out our previous news live at 5s. We do speak in depth about the Gemini dollar. It seems that only traders rely on stablecoins such as Tether to weather sudden drops in Bitcoin or altcoin prices, which makes the need for such an instrument questionable to the extent that commerce is concerned. Please do let me know what you think in the comment section below. I'm very interested to hear what you guys have to say, and if any of you have any very interesting points, it'll be awesome to bring you onto one of these live at 5s to have a discussion with me and kind of tell me your point of opinion. Next, we're going to be taking a look at the son of a coin section that we have every single week, and this week it's very, very cool what we're talking about. Remember, CFTC recently declared Bitcoin as a commodity, which could bring a lot of Bitcoin ETFs pending for approval. And what does that mean for us? Well, that is what Son of a Chain is going to get into today on the Son of a Chain segment. So let's take a look at that. CFTC declares Bitcoin is a commodity for regulatory purposes. Here we go.
CFTC declares Bitcoin is a commodity for regulatory purposes. The CFTC came out with an official decision on what Bitcoin is. According to the US regulator, Bitcoin is a commodity just like oil, gold, or agricultural products. The CFTC has been operating under the working assumption that Bitcoin is indeed a commodity for years now, but now the US regulator has made it official. This bodes well for all of Wall Street bankers and other prominent people who have been trying for years to launch Bitcoin ETFs and other derivatives for mainstream consumption. If they succeed in doing so, then Bitcoin prices could rise, but volatility can also increase. There are not enough people in the world who truly understand Bitcoin and how the market for the cryptocurrency operates. Additionally, Bitcoin has been around for less than 10 years. Wall Street is unlikely to understand what to do with the limited data and the asset itself, which might result in high price fluctuations based on arbitrary assumptions. Expected price fluctuations due to the possible launch of an ETF shouldn't affect your decision-making about buying, holding, or selling. First of all, ETF approval is still far away from becoming a reality. Even after the landmark decision by the CFTC, then there is the issue of your own approach to Bitcoin and other altcoins. Purists are likely to ignore the ETFs altogether. For this core user base, Bitcoin is about being free from the traditional financial system. So any price on the market that is determined in fiat is less likely to affect their decision-making, whether to hold or not. Other more pragmatic, large-scale holders will probably use the launch of an ETF to piggyback on a sudden price increase, selling at a higher point to buy their coins back after the market has moved behind them. The people who can do this are those who hold thousands of coins, and there are not many of them. They can really move the market and get their coins back while making a quick profit in fiat. So how does a potential Bitcoin ETF following the decision by the CFTC affect us? That depends on what you want out of your coins. Like I have said before, I am a long-term holder because I believe that the financial system the CFTC and those speculative ETFs are part of will eventually collapse. Therefore, I will keep most of my coins even if the price goes up. However, for those of you looking for fiat profits, if an ETF comes around eventually, Bitcoin prices could go up initially before they start fluctuating according to the whims of the bankers. This might be a good opportunity to sell if you are interested in fiat profits. There is also a middle-of-the-way solution. Divide your Bitcoin holdings into three: a long-term reserve, which you will only tap into in case of emergency, a shorter-term reserve which you can trade with and take advantage of sudden price changes, and a short-term reserve that you can use for a day-to-day expense or other purposes. Just don't hold your breath for those ETFs yet, because it will take a long time for any to be approved, even after the CFTC decided that Bitcoin is a commodity.
Right, so please do let me know what your position is at the moment in the market, especially now that Bitcoin has been declared a commodity. Please, I'm really interested to find out what is your expectation of the market. Are you expecting to possibly sell when the price goes up? Are you a long-term holder yourself? Are you going to use the 3 steps, which is a long-term reserve, a shorter-term reserve, and a short-term reserve? Please do let me know in the comments below. Now, finally, guys, this is the end of the live stream. Very interesting today that we brought on someone to talk about some of the virtual currency stuff. We're still working at some technical difficulties, trying to arrange everything in such a way that it is the easiest process for you, the viewer, to watch. But if you did like this video, please do give us a like. If you do have any constructive criticism for us, please do leave it in the comments below. And hit that subscribe button, because as you will know, if you've been watching since the beginning of the Live at 5 series, you will see that we have come a long way from where we are today. And it'll be very interesting to know how you feel about the progress that we've made. Thanks so much for watching, everyone. I'll see you on the next video. From myself, BroKaine and Bitcoin Chaser, I'll see you guys next week, Wednesday, live at 5 p.m. GMT. Bye-bye, guys. Have a good one.